Oh, I was muted. Sorry. Hi everyone. Hi once again. Welcome to our live analysis. So as I was saying, while I was muted, I'm trying today's webinar to distribute it at the same time into multiple channels: YouTube, Twitter, Facebook, LinkedIn, and etc. So if you're facing if you cannot see me or hear me, please let me know. For those that have attended through the GoToWebinar, please stick it on the question box. For those that are in social media, please add a comment and let me know if you're facing any issues, and also tell me what you want me to analyze, what asset you're interested in order to actually see it together. So today we're gonna do some fundamentals, but we're gonna do most of them will be technicals. So I'm actually referring to the let me just okay, here's a better quality, okay. So as I was saying, we're gonna see together a bit of a technical analysis for the asset that you are interested in. Okay, welcome Adi, welcome. Not sure what your name is, but you're saying that your YouTube user is Forex trader. So here's Stuart in the back. So welcome everyone. Okay, yes. So let me, before I reply to your questions, dear Adi and Forex trader, let me double check whether the GoToWebinar works properly. Mugadi, I can see that you're saying that. Can you confirm whether you can hear me loud and clear, Mugadi? Okay, in the people that have attended through our webinar page, please let me know whether you can hear me loud and clear. You can see the screen as well. I have the dollar index over here in a 4-hour chart. Let me know. Yes, I can now. Perfect. So, okay. Fingers crossed. Okay, I can hear you. You can see me as well, I guess. Okay, guys. Feel free to ask for any asset you want. Okay, it's a live analysis, so you're gonna go through the charts in different time frames, explain the fundamentals, explain the technicals. So feel free. This is your session, as we keep saying. So feel free to ask for the asset that you want us to analyze. Okay. So obviously, I'm gonna start with dollar index, especially after this big jump rebound that we have seen yesterday, after on the announcement of the inflation figure from the US and what that signal. Thank you for the feedback, guys. I keep seeing your feedback. I can't see you, but yeah, you cannot see me because I'm at the same time. You can see my screen, right? You can see the screen though. Okay, I will wait a bit. I can see the reason that you cannot see my face in the GoToWebinar is because I enable the camera for the social media, so Facebook, YouTube, and etc. So apparently I cannot distribute it into more than one. Okay, perfect. That's good. What matters is the screen, not so much my face. Okay, so. Okay, let's start with the dollar index until you decide which assets you want me to analyze. Okay, let's see a bit of fundamentals firstly. Okay, to explain a bit the jump that we have seen, this big jump that we have seen yesterday, that affected obviously the whole market. Okay, so yeah, as you know, let me just Okay. So as I was saying, we had the most important data release yesterday, the most important of the whole week. It was the inflation, which even though it was a tick lower, it came higher than expected. So we got a big upside surprise, and that was what that meant in simple terms, is that the so far aggressive action from the Fed, it seems that it wasn't enough to put some relief on the prices for the third quarter. Okay, so it was this upside surprise is in inflation. Okay, supported that Fed needs to do more and not to pause their aggressive policy tightening. In order to control the inflation, they will need to do more. Okay, and that's why we have seen all this big jump in the dollar. Can you see over here that from the 107 territory, 107.60, it jumped more than 200 pips after the data. So yeah, it's what it signals. Okay, what is signals? So first of all, it signals that inflation is not in control yet. Okay, the market thought that the latest data that we had, like the August jobs report, and some weekly data that we were getting, the jobless claims and the NFP the August NFP report is the bit the concerns of further aggressive action from the Fed. There was a belief, there was expectation that inflation will be controlled soon. Okay, so that what the report yesterday, that upside surprise, it got the markets a bit unprepared for this rise. It was a bit of a surprise, and actually add more to the concerns that in order to control inflation, they need to take more action. So that's why we have seen stock markets in a sell-off, dollar on beat, yields moving higher on the hotter than expected US inflation. But it's what they mean, as I said. It literally boosted the assumptions that the Fed will proceed to further rate hikes. So you know that. So yesterday's release really confirmed that the 75 points for next week is a done deal. Okay, but that wasn't the important part of yesterday's report. The important part is that it didn't only confirm the 75 points for next week, but it added more to the aggressive tightness for the whole year. And so now the 100 points rate hike is on the table as well. So yeah, it boosted literally the Fed rate hike assumptions. So 75 are expected for next week, another 50 for November, another 25 for December. So now the expectations are that the Fed will not stop hiking, okay, until December, okay, in order to respond to this sluggish monthly inflation gains and the deterioration of the economy. Let me mute a bit the Skype. So it's the risk. It's the risk that recession, the risk of a recession, and the fact that they need to keep hiking rates in order to face this technical recession. So let me just mute a bit this chart box. Okay, in the GoToWebinar, I can see that there are no further questions, guys. Please stick on the question box any asset that you want me to cover, okay? So where we're going, what we can see in dollar index right now. So I will go to the 1 hour chart. Let's put the intraday setup in. That's the 1 hour chart. This is my usual setup, our usual setup, I should say. Let me just, okay. Sorry, just a second. Just a second. I need to send to Stuart something. Okay, so first come first serve. We have gold and pound from forex trader after I'm done with the dollar index. Oh, dollar. Remember, guys, dollar index for the time being for this week is the driver of the market. The dollar development is what drives gold, what drives euro dollar, dollar yen, cable, and etc. Okay, so after this big jump yesterday, topping at 109.90, pretty much. I haven't put it precisely. We have seen a bit of a pullback, which was a bit limited since the asset managed to sustain gains, okay, and to hold in the 109 territory. You can see there was a bit of a correction, okay, but it found the support at 109.23. You can see that the fast moving average, this is an 1 hourly chart, 1 hour chart in dollar index, okay? So found support already. The fast moving average flattened, Bollinger's flattened. So what we have, RSI above 50, holds above 50. A bit of a, oh, you cannot see it. Let me just, okay, now you can see it. So RSI holds above 50 and starts to point higher again. MACD still positive. It was a bit of a pullback from rising. There was a bit of a decreasing, but still well above zero. Okay, and the only one that is a bit in contrast with the other positive, with the positive. Oh, that's fine. Yeah. So yeah, the only one that is coming with contrast with the fact that the other indicators and our chart are pointing to a bullish bias is the stochastic. Holds above the oversold territory, but hasn't really confirmed a bullish crossover here or a bearish crossover here. They are clash right now. The two lines clash. That looks to be like a bullish cross though, okay, but it hasn't really confirmed yet. So what we're having, supported at 109.23, back above 109.50, and it looks that is well supported, and that was just a correction on this sharp rally that we have seen yesterday. So the resistance, the immediate resistance holds at yesterday's and so far highs. So 109.90 was at the key immediate resistance level for dollar index. While on the flip side, okay, on the flip side, the latest relative low, the 109.20, is our immediate support level. A break below that level could retest this confluence over here around 109 level, confluence of our 200 and the 50 exponential moving average, and which also coincides with the 28.2 Fibonacci level. So that's a very, very strong support area intraday for the asset. Round number, two moving averages, Fibonacci level, so it's a very strong support level. On the flip side, 109.90 is the key resistance level. So if I zoom out a bit into the 4-hour chart, you can see that a break of the 109.90, okay, is the yesterday's top, is a fractal, okay. So a break of above it could turn dollar index back to last week's highs, and I'm referring to 110 territory and 110.80 handle. Okay, so a decisive return to 109 territory and a break above it could open the doors to last week's highs. However, there is no the momentum in the 4-hour chart, in the daily chart, are still a bit is not so clear. So we need to see a confirmed rebound for dollar in order to suggest that it will continue its rally. Because you see, as you can see, RSI holds at 55, MACD is still negative. Actually, it turned positive, but the signal line is still below zero. So yeah, for the time being, the 4-hour charts have been neutral from momentum perspective. So for the time being, is in a correction. Okay, intraday at least. So flatten, moving average, etc. Let's see the dollar, the daily chart. As you can see, small correction after yesterday's candle, holds above all our daily moving average. Momentum is strong, so that literally says that the long-term outlook holds positive. This is something that didn't really change I mean, the dollar has been in a rally since for nearly 2 years now, so that hasn't really changed. Yeah, that's dollar. Let's go to gold. Gold and cable is something that the forex trader in YouTube has asked, and my dear friend Muhyiddin in the go-to webinar asking for gold as well. Okay, sure, guys. Gold. Here's a gold, and I would like to start from the daily chart over here. Okay, because I want you to closely check this line over here, this red line over here. This is the 1700s territory. It's a key round number, right? 1700s, which the gold is flirting with it since yesterday. So the bears, even though they took the control yesterday, they didn't manage to break that level. Okay, you see, big bearish candle reversing all the gains that we have seen for nearly 2 weeks now, but didn't manage to bring gold below 1700, and it's still today, so far today, still holding above that level. Okay, so this is a round number. Okay, first of all, 1700 is a round number. So that the fact that it's a double zero number, it's a round number, it suggests that it's an important handle. It's an important support for the asset, because a break of the 1700s, okay, could bring this floor, the year's floor, into attention once again. So August lows and July's lows will be the areas that we can turn in case that gold extend losses and manage to break this double zero territory, this double zero support, the 1700s. So on a break of that, doors could open for 1688 and 16. Let me just be precise, okay? Let me just put the line on the front, and 1680, okay. 1680, that was the July's bottom. So it could open the doors to 1680 territory, okay, in the near term. Because why is that? It's not only the body, how big this daily, that yesterday's candle was. It's not only the fact that it could break this double zero, this round number territory. It's also the momentum, the medium-term momentum. The momentum, as you can see from MACD, RSI as well, remains negative, holds negative. Nothing has changed. Can you see, even this slight recovery in the beginning of September didn't manage to turn the bias, the momentum, into the positive territory. So MACD negative, RSI at 39, so below 50, so that's a negative, suggests negative bias. with the asset failing in September, and actually for more than 19 days now to move above the 20-day moving average, so it's below all its moving averages, and is retesting the 1700 key support territory. So all these add to the, from the technical perspective, to the to a pessimistic outlook for gold. Now, from fundamental perspective, pessimistic outlook is still on, I'm afraid. So gold is driven by the central bank outlook, the this fear that in regards to the global growth, dollar development. Okay, Israel is driven by the dollar strength, and that keeps the dollar the driver of the bullion to the to a possible resumption of its downtrend. So the fact that the more aggressive Fed action is expected, it could continue to shift having flows from gold into the safety of dollar. Okay, so they will keep the gold under pressure. Now, yes, I will be able to analyze Nasdaq and US oil, guys. Don't worry, I'm on it. Okay, just I'm taking one by one because there are a lot of questions in the social media as well. So I'm taking one by one. I cannot advise you, dear Banele, what to do. It depends which time frame you are referring to. Is it a long term, short term? I cannot really tell you what I cannot really suggest. I cannot really tell you what to do. What I can tell you in regards to the dollar is that the long term picture, technical picture, shows that dollar remains on bid, remains in an upwards trajectory. Momentum is positive. That's the daily chart. Intraday, we can see that it found support, is trying to recover a bit, but the and the next resistance area is the 109.90. For the time being, the intraday outlook is neutral since our moving averages and the Bollingers are flattened. Okay, and we don't have so it's a neutral to bullish intraday picture, as you can see over here. Flatten moving average suggests consolidation, but RSI holds above 50 and it points to the upside. There is a bullish cross in stochastics as well. So it seems that the bulls support the dollar index intraday, but as long as we don't see the asset turning above the 20 period moving average over here, the picture remains neutral. Hopefully that helped you. What is the main reason of dollar strength? I explained that earlier. I'm not sure whether you were here at the time that I was explaining that there. So is the fact that next week we're expecting another 75 points hike from the Fed, and the same stands for October, another 50 points, and another 25 in November and December. So basically, the fact that the markets have started to pricing a bit of a the more hikes. If a bank is increasing rates, that tends to appreciate the country's currency. Okay, to make it more expensive. So this is what is going on over here. Is on the aggressive tightness of the Fed. SMA is a cost sell limited for the drop. Thank you. Okay, I don't know whether someone will agree or not, but someone is spamming me over here. But never mind. I'm here to help the clients, and I'll just ignore the spams. Okay, so let's move on. And cable. Yep, cable. We see Capello. We have seen just now gold. Did you manage to see it? What is the correct? Oh, you're asking something else. Sorry. What is so Capello is asking what is the correct session to trade gold? There is no correct or wrong or right session. That's up to you, dear Capello. You need to decide what you prefer, what it fits your personality. Are you a long-term trader? Are you an intraday trader? Are you a scalper? Are you what you prefer? I cannot really tell you what's the correct or right or wrong. What's right or wrong for gold? If you're referring, I'm not sure whether I misunderstood. I misunderstood your question. Now, if you're asking what's the best market session, I mean Asia, US, Europe for gold, then so that would be I think in the US session. It tends to be the most volatile one. Okay. So I'm not sure. Is it possible to anticipate this great move and take advantage of it? How do we position for such great moves in the future? It was a surprise. It got us into surprise there, Olusegun. The economists all over the world, analysts all over the world, the majority of the markets was anticipate that inflation will actually get lower. So it was a bit of a surprise. I'm not sure whether you can predict something like that, okay? But okay, and obviously I cannot tell you how to take advantage of this great move. But if you have a trading plan that you're following, a setup, and if you have seen that after the announcement, your setup has triggered a possible long position in dollar, then to your appropriate, set your target, set your stop loss, and go for it. I mean, you cannot really. You need to use appropriate tools in order to find when is a good time to enter the market. Use your setup, okay? Use your strategy. If it triggers, then think about it, and it's up to you whether you want to join or not, you want to enter the market or not. But rely on your indicators, rely on what you see and not what you think, okay? I'm not sure whether you have a setup, you have a strategy or something, but yeah, it is what it is. I mean, if you have your indicators and it triggers everything that by checking your charts, your indicator, it suggests that it's a good time to enter the market, then do a quick risk management with appropriate stop loss and target, and go for it. So pound, I left it. Okay, so cable. Here we have cable. Onuga, does dollar has a positive correlation with gold? No, it's reverse. It's vice versa. The higher the dollar gets, the lower the gold tends to go. I mean, it's a dollar cross. I mean, it's okay. So that's vice versa. It's not a positive correlation. It's a negative correlation. Okay. So let me get back to the cable. Yes, we have cable. That's the daily chart first of all. Okay, we can see, no, you can't see. Let me just not a bit, zoom in a bit. So cable had seen around 250 pips decline yesterday, back to 115 territory. Okay, that's the daily chart. You can see that overall the cable remains in a very long drift downtrend since January 2021. Okay, so and if I just add my regression channel as well, oh, wrong. Here we are. Here we are. You can see that continues its downtrend. So remains on the low territory of the channel, reverted yesterday and entered and close below the midline of this channel. As I said, close below the 115. Currently found some support at the above 115 territory. Okay, but overall the long-term outlook for cable remains negative. So in a long-term decline, because there were corrections, but lower lows and lower highs imply that the cable continue the downside for the long term. Now, intraday, let's put the daily setup on. Okay, here we are. After the drift yesterday, it found some support. Okay, rebounded on the European Open, but it seems, you zoom in a bit, I'm gonna zoom in a bit. It seems that that bounce looks a bit limited, struggling to move above the 50-period moving average and the 38.2 Fibonacci level, and is consolidating for the time being between the 23.6 and the 38.2 Fibonacci level. So consolidating within this territory, with the momentum indicators present some neutral to negative signals. So let's take it one by one. Resistance holds at 115.70, 75 to be more precise. Okay. Oh no. Oh, yeah, that's the 50-period moving average. Okay. Support, actually, I'll put the 30 minutes chart. Here we are. Support is at the latest bottom and the 115.38. So you see that this is the 30 minutes chart, and the reason why I've set the 30 minute chart is to show you that it's consolidating today between these two barriers. Okay, but yeah, that looks to be limited. What the technicals show is that this is a limited rally. So you see the doji candle over here, return back lower. The MACD turn positive, but signal line remains below zero. Stochastic over here, which is our fast indicator over here, it shows that rally has ended, has run out of steam, and is turning back down again. So we have a bearish cross over here from stochastic with both the fast and slower line pointing sharply to the downside. So that implies that this has run out of steam. So our asset might enter some kind of consolidation before getting back either to yesterday's bottom or on the flip side. So these barriers are our immediate support and resistance levels. Okay, a break below or above that could clear a bit this neutral intraday picture for cable. So a break below 115.38 opened the doors to yesterday's bottom, while a move above the 38.2 Fibonacci level opened the doors to 116 territory and 116.40. Okay, but this is only if we have a decisive move above the 38.2 Fibonacci level. Momentum indicators are not supporting such a scenario for the time being. Okay, so someone asked about Nasdaq and oil. So let's flip a bit into the stock market and Nasdaq, or was it? What was it? No, it was. Yeah, it was Nasdaq. Yes, correct. So here is Nasdaq. As I said, the announcement yesterday added a significant pressure on the stock market. Okay, significant pressure. So actually, Wall Street, as I was reading earlier, it had its worst session, one of its worst session, if I'm not mistaken, since 2020. Okay, and you can see this huge plaque of Nasdaq yesterday. Actually, Nasdaq, if I'm not mistaken, was the one that drifted the most. Yes, it crushed. So Nasdaq, so USA 100 over here, dove by more than 5%. Dow Jones dove by more than nearly 4%. So Wall Street had its worst session, as I said, since 2020, and that is is due to the surge in yields that exacerbated this sell-off. So I will zoom in. This is the 1 hour chart there. Let me just double check who asked for the where is it? Where's my question and answer? Lost my question and answer. Oh, here it is. Okay, I think it was Olawale. Well, Olawale asked for Nasdaq. So this is the 1 hour chart here. Okay, I'm gonna zoom in. Take it bit here. Okay, perfect. What you can see is that it's consolidating at yesterday's bottom. 3 fractal lows. You see that? 3 fractals at the bottom. Okay, so that's the support area. It's our support area. 12,000, or more precisely 11,998. That's yesterday's bottom and a key handle, because a break of it could alert more sell-off, could attract more bears if the asset turns and move below that line that I have just drawn. Okay, sorry, this is not this is Nasdaq. Okay. Oh, a lot of questions are coming still. That's a very general question, dear Ali. Ali is asking, why must news or any announcement affect the market? Ali, don't forget that everything that we have, everything that we trade, everything that we invest, everything in life, okay, supported by how healthy or not is each country's economy. If a country is healthy, okay, is healthy, it's developing, is growing, and etc., then it's going to have a strong currency, right? If a country is in a recession, okay, and it needs to and people are suffering from for living. They need to consider. They need to pay only. They can afford to pay only for the necessities and etc. So then that affects the market because I mean all our think about I don't know whether you have a business or not, but uh, think think markets are like think trading, for example, like a normal business. Let's assume that you had a shop, okay, you were selling stuff, okay. If you were selling, uh, I don't know, you jewelries, why not? The prices, your suppliers, okay, for your suppliers, because of what's going on with the energy crisis, okay, with the rising energy prices, with the price of the gold and etc., they will change them the how much they are selling to you, okay, and as a consequence you need to sell your stuff in a higher price in order to afford it and in order to gain as well, and in order to, because you're doing it for living, right? Okay, everything is correlated. Everything is correlated. Each country has sources, has its sources, right? For example, I don't know, Saudi, one of the biggest producer of oil. The whole economy of Saudi is based on oil. Okay, so the fact that if the oil prices globally are rising, that's a benefit for Saudi because it's an asset that it has plenty of and it's selling it to the people. If the oil is going down for any reason, okay, something happened, etc., then that's a bad thing for Saudi as a country and for the people living in Saudi and etc. So you need to see the whole picture, and it's good for you to take a step backwards and check what this, do a bit of a homework, a bit of a research. What is an inflation? How it affects our daily lives? How it affects the markets? Why it affects the markets? I mean, okay, take a bit step backwards and check why the economic data are so important, because literally they show whether a country is growing or is weakening. An economy of each country is weakening, and that has as a consequence how it affects its currency and the assets that is correlated into. Now, let's get back to Nasdaq. This range is what we have seen since yesterday, consolidating between 12,116 or 60, sorry, or no, 12,140. Put it precisely, consolidating between 12,140 and yesterday bottom 11,998, consolidating within this area, within yesterday's bottom territory since yesterday. Okay, but as you can see, down a bit dodgily, a more aggressive bearish candle just now. MACD aggressively, sharply, actually far away from zero. So that is a negative signal. RSI turning back below 30 and pointing to the downwards, another negative signal because there is further space to the downside according to RSI over here. So everything comes in line with a further decline for stocks and more precisely for Nasdaq. So on the break of this immediate floor, the break of it, then the next support area lies on last week's bottom and the 11.9. Let me be precise. Let me see the 11.921 territory. So 11,921. That's in intraday, okay? On the break of this immediate floor, the next support is around 80 points lower. Okay, that's the next floor. So negative intraday outlook. Let's see the daily chart. Pretty much is in the same. It presents something similar. And what is very important in the daily chart for you to see is this bearish cross between the 20-day moving average and the 50-day moving average. So we have a confirmation over here, a bearish cross, 20 crossing below 50. So that's a bearish cross. So MACD negative, actually a bearish crossing MACD as well. RSI 38, still negative. So pretty much the next support territory for Nasdaq in the daily chart is the bottom of the Bollingers, is the lower Bollinger Band area that lies on 11,678. Okay. Yeah. So hopefully that helped you, dear Olawale. I'm sorry for delaying to reply to your Nasdaq question. Let's flip to oil because a lot of people ask for it. So let's flip to oil. We have seen gold. We haven't seen euro dollar yet. I'm gonna get back to you, Azar. Let's see gold. Let's see oil. Why do markets react to news before it is released? Is people pricing in, and actually it's people trading the news. It's market participants trading the move, the move. I mean, the release. You remember the market moves all about sentiment. What the market participants are expecting, believing. Okay, so this is what happened. So if I take a step backwards and go back to my dollar. Oops. Okay, so where is my dollar again? So have in mind that markets go up, down, sideways, right? That is fluctuations that we're seeing because of supply and demand. If more people are buying an asset, then the market price increases. More people selling the asset, then the asset is turning lower. So the fact that we were seeing, let me see. So that was before the announcement. Actually, wasn't the announcement was here. So there wasn't before the announcement. Okay, before the announcement, you could see that there was a lot of dodginess. There was a lot of small body candles, a bit of a decline, but not a significant move prior the announcement. So actually, the jump came on at the time of the release. So over here is not. It shows that what happened yesterday, like people trading the news and not trading, and not reacting, and not. Sorry, I'm a bit tired. And not pricing in potential results of the news. So sometimes, yes, we do that. We see that markets could react before an announcement, but this has to do with with how people, what the market participants, not the people, because it's not only about retail sales, individual investors. We have professional traders, institutional players over here, and they are the ones that actually move the market. So, what I was trying to say is that market participants may pricing in advance how they expect the news to come out. Okay, so this is what sometimes happens. You should know that professional traders, for example, I mean, big institutional players, big companies, etc., spend a lot of time and effort to trying to anticipate the news cycle. So they can buy and sell an asset before the real numbers are released, because they want to catch the best price possible. That's why sometimes we're seeing some moves before, on the anticipation of the news. Okay. So many professional traders are using government economic reports in order to as indicators, in order to set positions in the market before the announcement. Yeah, that's an effort that they are doing in order to buy and sell an asset before the real numbers are released, and in order to be at the beginning of a potential trend, let's say. Where we left it, on the oil, US oil. Okay, let me just remove a bit of all this. Delete. Okay, let me get rid of the okay, let's start with the daily chart. Actually, let's start with the weekly chart, okay? And the reason why I want to start with the weekly chart is because I want to show you, let me just, where's my, yeah, here we are. Okay, that's the weekly chart, sorry. I want to show you that for the last more than 3 months now, the oil is moving lower, far away from the 126 level that it was the highest level since actually for many years now. So breaking the 50-week moving average, Bollinger's extending lower, and settled for the time being at 86 territory. So, but it holds in a downwards trajectory, as you can see in the long term. I will put the channel on. Can you see the channel? Week after week, posting a new low and a new high, and a new lower high, and a new lower low, I should say, with the momentum holding negative as well. You can see that from the RSI. If I connect the peaks of the RSI, okay, I can see that it moving lower. Okay, it's keep moving lower. So let me put better line on. You see that? So lower, and keep. So there is an overall bearish momentum in the long term for oil. Sorry. And why is that? Let's check the fundamentals first. pretty much the same stuff. Europe is in an energy crisis, trying to figure out ways to solve the current situation with the gas. Okay, Russia, on the flip side, also is affecting the oil because the continues to sell oil into the Asia market and elsewhere. So that is counterbalancing a bit the OPEC's action and OPEC's actions to control, to stabilize a bit the price of oil. Also, China, one of the biggest consumer of oil, is still battling a bit against COVID-19. But what is the main driver of oil? Okay, is the fear that the global demand will get hurt. Okay, and is also the fact that Europe is in a recession, and we have also the energy crisis. Recently, actually this week, Morgan Stanley and UBS group, they have cut their near-term outlook for oil because of the fears that since the central banks will get more aggressive, that could hurt the global demand. Okay, and that's something that could keep oil in a downwards trajectory. Okay, now in the long term, since this latest bottom since we have a new lower low at 80 territory, 80.90, that's the support level. That's the very first support level for US oil in the medium term. So if this week this asset continues to move lower, then 1890 is the next support level for the oil. Now I'm gonna turn to, you can see this is coinciding also with the midline of our channel. So yeah, 18 and the Bollinger. So this is the daily chart. Can you see that everything clashes? So the August bottom 1895 coincides with the daily Bollinger Band territory and with the middle line of this 4 months down channel. So that's the next floor if the asset extends losses below 86 territory. So bullish, dodgy, but with a long tail yesterday, a long tail lower. So if today's session closed with a bearish strong candle, okay, that could alert a potential retest of this territory over here, okay, 80.95. Okay, so intraday oil. We are okay, consolidate. So what we have over here. So a lot of consolidation is what I can see in the 1 hour chart, to be honest. You can see, okay. Actually, no, sorry, my bad. Wait a minute. So MACD turn negative, actually extends negative, bearish cross of stochastic over here. Can you see that? Extending, pointing lower, RSI at 41 and keeps pointing lower. Bearish cross of the fast moving average as well. So yeah, there was, that's on the, this, let me double check what's going on over here. Okay, give me a second just to see what's going on. I might missed something. There's a big hourly candle over here from 87.65 down to 86. Let me just double check. Okay. Cannot really see something other than the fact that we are just 20 minutes away from the PPI number later on. Or actually, okay, so yeah, so some sell-off has been seen the last hour, apparently driving oil to 86. So a break of 86 territory could, okay, let me zoom out a bit, could open the door to 84.50 territory, but we need to see the asset actually breaking the 86 territory decisively. Because for the time being, can you see it was a sharp decline the last hour, but the asset is within the Bolligers, and the Bolligers are moving sideways, suggesting that it will remain into consolidation. Okay, so what is important over here is a potential breakout of the Bollingers, either the lower one or the upside one, in order to exit this ranging market in which we have seen it since yesterday. Okay, so 85.75 the bottom, so the support, and 87.80 the resistance for the oil for the time being. So a break of one of these territories could present could clear the direction for oil. So a break of 87.80 could retest the 89 territory, while a move below the 85, this the lower Bollinger Band area, could retest the week's bottom and the 84.50 territory. Okay, but yeah, it's a bit. Not so clear over here. It seems that it has already found some support, so it looks like didn't really impact it significantly in the market. Whatever this move is, it hasn't really significantly affected the oil for the time being. But let's wait and see. Let's wait and see. So we have seen gold. Oops. Where's my questions? Oh. All of my questions in the restroom are lost. I cannot see them for some reason, but I'm still live. So guys, if you have added an asset that I haven't covered yet, can you write it again? For some reason, the chat is clear right now, and I cannot see what you asked for. I remember that I left behind the dollar yen and the euro dollar, so I'm gonna go for it. But if you have asked for anything else that I haven't analyzed, let me know, okay? And let's hope that you can still see me. So euro dollar failing to move above parity and actually consolidating around parity level. Can you see that? So so consolidating around parity, so the lowest that it gets is 99.50, and the highest that it got today is the 10023. So consolidating around parity. So, but what is important is not only the parity, is this 200-hour moving average. It failed to break it earlier, and it posted an evening star formation. Okay, so that's a bearish formation that could bring the asset back down and retest this yesterday's bottom at 99.54. Momentum indicators are still presenting so momentum indicators are still under pressure, are still below the neutral zone, suggesting further bearish bias, further that sellers are still in control. But intraday, 99.50 is our immediate support level with, and if the asset extends losses, extends below that level, then, the next support levels for euro dollar are down to here, 99.07, and so 99 territory, and 98.70. Why? Triple fractal, and you see that triple fractal, 1, 2, 3. So break of 99 territory could retest here the September 5th and September 6th lows, 98.70. Okay. Overall, euro dollar is in a continuous long-term decline. Euro dollar, remember, is a comparison of the US economy and euro economy. Euro is clearly in a recession with all these that are going on. So it seems that it hasn't found its bottom yet. But intraday is what I just mentioned. 99.54, 99, and 98.70 are the support levels for the day. Resistance hold at this 200-hour moving average. So only a break up above that level could suggest a potential retest of the 100.50 and 100.70 territory. Okay. This is an evening star formation, so it's a bearish pattern suggesting further pressure on euro dollar. Dollar yen, the only one that extended gains yesterday, okay, but quickly reverted back down again as some officials in Tokyo mentioned the intervention of into the currency market in order to control a bit the weakness of the yen. So that saw some gains for yen, okay? But as you can see, the daily chart, the asset remains in an uptrend. So as long as it doesn't move below the 20-day moving average and the 140 territory, the outlook remains positive in the medium and long term for dollar yen. It remains to the upside as long as it doesn't come below 140. So it remains to the upside. Momentum is really, really strong. You can see that from MACD. So for the time being, further gains will be seen only if the asset comes up and breaks and finally breaks the 145 territory. Okay, I'm gonna amend this. 145. It is. Extension of the rally will be confirmed only if the asset managed to break the 145 territory. So intraday corrected, as you can see, found some support over here, but the moving averages are keep pointing a bit to the downside. MACD is neutral, RSI are 42, some bullish signals over here from stochastic. So there is no clear picture right now for euro. For dollar yen, so I'm gonna put some support and resistance levels. 143.72, our latest fractal, is the immediate resistance level, and 142.88 is our immediate support level. So a breakout of 143.70 could bring dollar yen back to the 145 territory, 144, 60, 70, 80 here, over here on yesterday's highs, while a break and a move below the 142.80 could open the doors to the 200-hour moving average at the 142.35 territory. Okay, easy busy. Just done that, dear Gobese. So if there are no further questions, I'm gonna call it a day. But okay, no, actually I have some questions from the GoToWebinar. So for Tesla, Apple, and Twitter, the market are closed right now. So they will. Let me just. The market will open in an hour. The stock market in the US, but let's see a bit. You mentioned Apple. Let's see how they perform, how they closed yesterday, and some support and resistance levels. Okay, that's Apple for my dear friend King Ogoguwo. So the 200. Okay, actually, okay. Let's see that's Apple. Okay, that's Apple. That's the latest fractal. Okay. And we have seen that on yesterday's dip, it filled the gap. But can you see how massive this candle is? And you see that there is a tiny tail higher. So such a tiny tail suggests that the bulls couldn't do anything. There is no bullish bias. Um, uh, there hasn't been any bullish bias, and the body of the candle, okay, suggests that there is a lot of selling pressure in Apple. So a break on the open, a potential break on of Friday's bottom, okay, of actually July, August, 2 months bottom. This is 2 months bottom at 152.50 could imply to further decline for Apple. So I'm gonna put a bit my indicators over here. And this on this latest jump. Here we are. So if in an hour Apple opens negative in red, extends declines, and breaks the 152 territory, then this area over here, the 61.8 Fibonacci level and the 100 Fibonacci extension level, it will be the next support for Apple. Okay. Twitter. Do I have a Tesla and Twitter? Okay, I'm gonna finish with those two then. Oops, sorry. Tesla split also back in the middle of August. That's why we can see this huge gap over here, but that's a split, so don't worry about it. Momentum, okay, that's not. Okay, let me just, because of the split, you cannot, it's not clear. Okay. Okay. So gap down yesterday, found the floor at 289, sorry, 289. So that's the support on the open. A break of it could retest the lower Bollinger Band at 289, while let me just use also our Fibonacci extension. Sorry. So keep an eye on the one on the yesterday's bottom, because also coincides with the 28.3 Fibonacci level. So a break of it in the US Open today could turn our attention back down to 285. So 285 is the lower Bollinger Band line coinciding with the 50 percent Fibonacci level. Okay, that's the support level on the break of yesterday's bottom. On the flip side, if it bounces on the open, okay, then we need to see filling this gap in order to suggest that it's turning back to the upside again. It needs to fill this gap and to break the 300 territory. If we don't see that, then such a bounce will be limited. That's pretty much it, guys. If you don't have any further questions, I will call it a day because it's been an hour and a half nearly, and I'm a bit tired. So, by the way, we have a question in not sure where is it, Facebook or something, but if PPI missed, do you think dollar will fall or pull back? So I'm not sure whether it's already out. Is it? Oh, 6 minutes to go. So okay. The PPI today is expected to be a tad lower, so 7.1% is what is expected from the 7.6% that it has been last month in July. So falling today will be it will be something that sorry. It will be something that will be so coming in line with expectations or missing expectations, so coming lower than expected, will suggest that if we exclude the food and energy, it seems that the PPI it's a positive, something positive. Okay, this is what I'm trying to say for the US economy. Okay, but if so, it could ease a bit this aggressive bid that is going on in dollar, because this aggressive bid that is going on in dollar is because of anticipation of aggressive tightness of Fed. Okay, so if PPI today comes even lower than expected or in line with expectation, that could ease a bit the current situation, and it could add a ceiling, on dollar's strength. However, if it comes higher than expectations, that could add on a potential pricing, further pricing on of Fed's rate hikes. So that could boost even more dollar, but it's difficult to say whether it will fall, dollar will fall or pull back. I mean, lower than, generally speaking, a higher reading tends to be positive, bullish for the dollar, while a lower reading, it tends to be negative for the dollar. But I mean, it's how the markets will interpret the announcement, the result, and how they will interpret it in regards to the Fed's meeting next week. I need more training on this. This is my first time here. I want to learn how do I go further. Please register in our webinars, dear Ali. We provide webinars every Tuesday, Wednesday, and Thursday every week, educational webinars. So you can get registered from the website hfm.com. Find webinars page and register on the webinars that you would like to see. The data, will wait a bit until the data are out, because it's just 2 minutes away, and we can see the result actually. So gonna get back to dollar. Dollar index 30 minutes chart over here. A bit directionless for the time being ahead of the data. 2 minutes to go until the data. So yeah, as I said, generally speaking, high reading could be bullish for the dollar, but the sorry. Okay. But yeah, if it comes higher than expected, that means that okay. So as per shopping so okay, let's wait and see what's the calendar. Let me share my the calendar with you, or just refresh. Come on, come on, come on, come on, come on. Should be out right now. Oops, we get a bit of a. Is it out? Is it out? 7.3. So it beat expectations. It beat expectations. Came higher than expected. This is the PPI number, the producer price index, excluding food and energy. Okay, beating expectations. Okay, and as we theoretically said, a high reading could support a dollar. We have a 7.3%. I'm not sure whether I can see somewhere. Let me check whether I can see the breakdown as well. So okay. Let's see. So core, okay, the core PPI 7.3, the base one above expectation, the monthly reading also above expectation at 0.4% than the 0.3% expected. 8.7% is the headline producer price index. I mean, including food and energy and transport and etc. Missing expectations as well. Let me just so okay, yeah, dollar is a bit, people don't know how to react actually on this news because yeah, because of how massive the CPI had been, and now we got a PPI that's just confusing the overall picture. Yeah, for the time being, it hasn't reacted significantly. You can see that it's stuck at the 109.60 territory over here. Let me just see whether I can find the breakdown of it. Yeah. Will the markets ignore the PPI and just focus on what happened yesterday? Yeah. So that is what is expected, really. So yeah, you see, there is a bit. There's not a significant impact. There's not a significant reaction on the PPI. Apparently, you can see that. But our resistance holds at the 109.90. So yeah, a confirmed breakout, bridge and breakout that level could extend the rally of dollar. Okay. So looks like the PPI might be a bit ignored, but anyway, the fact that the headline came above expectations, theoretically speaking, is bullish. Theoretically speaking, only. Okay, so yeah, so there needs to be a bit of a clarity. Has stuck for the time being. So. Okay, guys, if there are no further questions, I will call it a date. Thank you, Adi. Oh, half officially. If you have no further question, and I can see that you don't have any further question. I don't have any further questions either in GoToWebinar or our social media. So I guess we have covered everything that you asked for. Keep an eye on the support and resistance levels that we have seen together. Okay, we have analyzed together. So dollar currently is a bit mixed after the data. Okay, but overall, as long as it sustains a move above the 109 territory, that implies to a positive outlook still. Okay. Euro under parity once again. Okay, euro dollar under parity. So you're saying, yeah, struggling a lot over here. So 99.95, floor at 99.54. As we said, a break of that could retest the 99 territory. Okay, guys, have a great day ahead. Take care. What is going on? What else is going on for the rest of the week? Is retail sales tomorrow from the US along with Philly Fed, employment data from Australia, and retail sales from China and UK on Friday. These are the some of the important economic data that they will be released in the next 2 days. Have a great day ahead. Take care and see you next week. Okay, see you. Bye bye. No, actually, what I'm saying, we have another live. We have another. Another live commentary tomorrow with Stuart. So Stuart is going live tomorrow as well. Live analysis, going through the charts, and yeah, we're gonna see you tomorrow. Then see you. Bye bye.